Today we're going to be talking about one of the most powerful confluences in the markets. It's called SMT divergence. It's very simple to spot, but if you implement it correctly, your win rate will definitely go up. So let's get right into it. Now, what actually is SMT divergence? So essentially, when we're trading, a lot of the time, we're going to be looking at correlated assets. So an example of correlated assets is Euro USD and GBP USD, and they're actually oppositely correlated with the dollar index as well. So EU and GU are positively correlated. Whatever one does, the other one will follow. And then when it comes to the dollar index, whatever the dollar index does, they will do the opposite. Okay. And essentially, SMT divergence is where you get a crack in correlation, right? So for instance, let's say that Euro USD makes a new high, right? But GBP USD fails to make that high, right? That would be called SMT divergence. Okay, and you're going to see me marking it up with these dotted lines. Okay, that's how I mark it up if you see my other content. So EU fails to make a high. Sorry, EU is able to make a high, and GBP USD fails to make a high. And then potentially at the same time, we'll have the dollar index that fails to make a new low, right? Because it's oppositely correlated, this low would correlate with this high here. So if the dollar index fails to make a low and that same high gets taken by EU, then that is SMT divergence with the dollar index as well, right? So when we're actually looking for a trade, let's say for instance, we're trying to sell Euro USD and we were waiting for price to take out liquidity like this high here and then move lower, but the correlated assets didn't take that liquidity. This is an added confluence to your trade, and it's essentially going to increase the probabilities. So it can look like this, where we have these highs and lows pretty close together, or it can look something like this, right? Price could form a high on the left of the chart, and Euro USD, could come and take out that high. Then we'll look for the entry model to go and target some kind of low, right? So we have that high that's been manipulated. And then potentially the dollar index could have made a low, right? That correlates with this exact same high, but then price actually moves towards it, but fails to take out the high, fails to take out the low when Euro USD was able to take out this high, right? So you can see that would be SMT divergence here. Now, where I actually used to get caught up by this is I would be looking to say sell Euro USD, right? After we take out this high, and we would get the manipulation, everything's great. Now I want to get my entry on Euro USD. However, I would go and look at the correlated asset like the dollar index, and I would see that price still hasn't taken out this low. And that would make me hesitate. That would make me not want to take the trade because I would want to see price come and take out this low. And because it hadn't, I would be questioning whether the dollar index is now going to come and take the low and my entry is going to fail and I'm going to hit stop loss. But this is before I knew what SMT divergence is. Obviously now I know that it's actually a good thing when this happens. And yeah, it stopped me from, waiting too long, hesitating and actually missing trades. So let's look into a real example of this I managed to capitalize on yesterday. So essentially, I was looking at Euro USD and I was looking at what I call a New York reversal cycle. Essentially, I was looking for New York to move to the downside. Okay, we had this 4-hour FVG here. You can see that price hasn't closed through, right? We've been respecting that perfectly. Okay, and in that FVG, you can see that price took out this high here. Okay, so we had the manipulation on Euro USD that I wanted to see. Right? We have the liquidity. Now I'm looking for my entry. So when it came to the entry, I was simply looking for some kind of shift on the 15-minute. Okay, if I let it play out, you'll see that we get that shift here. Okay, we've got that 15-minute shift because price has closed below this low here, below the bodies of the candles, and that essentially is forming a bearish order block, forming bearish arrays. So we're bearish. Okay. So on EU, it was perfect, right? We're taking the liquidity, everything was good. But if we go on the dollar index, you'll see that this is the same low, okay? Wednesday, the 16th of October at 4 a.m. If we go on Euro USD, Wednesday, the 16th of October at 4 a.m. Okay, so that exact same low on the dollar index, price had failed to come below. So in the past, I would be sitting there thinking, oh, I wanted the dollar index to manipulate that low. Therefore, I'm not confident in my entry because the dollar index could push lower and correlate with EU and make me hit stop loss. Okay, but now that is SMT, and I understand that. So it's manipulation. That cracking correlation is manipulation, and essentially it increases the probability of your trade. Okay, so I saw that we had that SMT, very, very nice. We switched on a dollar index as well. It was perfect. So from there, I literally just navigated my entry off of this 15-minute FVG, my stop loss at the equal highs of these bodies up here, and I targeted the lows. You can see that we tap into the entry, and then we go and we move towards the target. Now, you'll also notice not only did we have this SMT with Euro USD and the dollar index, but we also had SMT with GBP USD. Okay, because if we look at New York high here, right, very clearly failed to get above this high. But if we go on to Euro USD, you can see that that is Asia high there, and we was able to manipulate that perfectly. Now, one thing that you have to remember when it comes to using this, and this is going to save you a lot of losses and a lot of missed trades, is you only look for this SMT divergence in alignment with your bias. Okay, so what do I mean by that? Well, let me give you an example. Let me draw out an example. This happens a lot as well. So let's imagine that you are bearish on Euro USD. Okay, you're looking to sell Euro USD, and obviously that is correlated with a bearish GBP USD as well, right? So we're looking for sells at these highs. Okay, so let's say that this high here, if we were to zoom in, let's say in the exact same example, right, we're looking for sells on Euro USD, and that's correlated with GBP USD, right? And you're waiting for your entry, right? Price has made a high, and you're waiting for that market structure shift below this low. But price stops here, okay? And we're waiting for price to take this low. But then on GBP USD, we get price taking out that low, okay? And we've had that shift before we've had this shift, but to you, it looks like SMT, right? Because price has failed to get below this low on Euro USD, but on GBP USD, we were able to take out that low. And you might be thinking to yourself, oh, that's SMT divergence. That's confluence for buyers, right? Which is opposite to my bias. And again, you're going to hesitate and you're going to not want to take the trade. Okay, but you don't want to think like this. This does not matter. The only time you use SMT divergence as a confluence is when it's in line with your bias. If you see this and you're looking for sells and you feel like this is making you hesitate and you feel like this is going against your bias, you literally just ignore it, right? You don't need to worry about it at all. Okay, chances are price is still going to come and take out this low. One is just moving faster than the other. So as long as you're trading in line with a higher time frame bias, you're not going to run into any problems using SMT this way. Now, if you want to know more about this particular trader model that I presented in this video, you can steal it completely free. I'm going to leave a link in the description and you can go and download all the details. I'm going to leave my X in the description as well, and I'm going to leave a link for my paid mentorship. We actually have an October sale going on right now. I think it's like 25%. So yeah, go check that out. And I hope you found value in this video, and I'll catch you in the next one.